Should we kick it off with Lemonade a bit?
They essentially disclosed that they are going to be acquiring a company called MetroMile, which is a really small kind of insurance provider that focuses on kind of advanced telematics and kind of pricing car insurance with AI around that platform. Lemonade's overall business strategy is to price things more efficiently, kind of use AI and kind of the current generation of technology, which is for the most part ignored by kind of the legacy insurers out there, and using that to price things more accurately. I think MetroMile has had some issues with their financials. The market clearly doesn't like it. I think it makes loads of sense.
Generally, I don't like mergers and acquisitions. They're diluting their stock with this merger. They'll be burning more cash per quarter. It increases the likelihood of Lemonade needing to go to the capital markets again. If you're trying to buy low, sell high, this is the epitome of buying low on an acquisition. So that is really a good pro to me. Also, it really accelerates the ability to roll out car insurance, which to me and you, I think, is the biggest business we see in Lemonade.
They're essentially kind of acquiring their way into being able to offer car insurance in 49 states. And then the other piece of it, I think, is the fact that MetroMile already has, I think it was 2 billion miles driven. So they've got a really good data set, but this just really accelerates the kind of feedback loop that they can have in pricing this insurance product accurately. If you have better data, you can certainly price better.
And then the last kind of, pro I thought of it was there seems to be a higher potential partnership opportunity with the existing auto manufacturer from this. I kind of listened to some of the Q&A or most of the Q&A, and one of the answers Daniel Shriver gave when they asked about like a partnership with Tesla or someone like that was that he's not going to talk about upcoming partnerships. He said something like that, and that MetroMile has talked about potential partnerships in the past. I don't think he was implying Tesla necessarily, but I think he was implying that there is partnership potential coming up. Lemonade is a $4 billion market cap company. Obviously, Tesla is going to be magnanimously more successful in everything it does. It's assumed in its market cap, right? So when we're talking about Lemonade, they just need to eke out some sense of success in the car insurance, I think, to be worth well north of 4 billion market cap. It's very risky, Lemonade. They're highly shorted. That's bullish to me too, medium long term, if they can ride this out and to become profitable.
One of the items that I think kind of got swept under the rug when I was listening to the earnings call, is their loss ratio degraded this quarter. But what they actually said is that their loss ratio improved in every single category. However, the mix shift changed quarter to quarter into the higher loss products. It looked like a decline, but what you've actually seen is that their AI is working, their pricing strategy is working. And then one other item that with the very end of the call that really stuck out to me, but they were saying that people getting quotes on MetroMile, so just at the kind of pricing stage, 45% of all people just getting quotes could see savings of 30% or more on their existing policies. You're going to see, I think, in the coming years, a huge exodus of the safer drivers to these cheaper options, to Lemonade. And then the
Geico's going to get
all
the hazard.
They're going to be the bag holders. It's going to be this death spiral where they're going to have to keep raising rates and raising rates.
I mean, I think it's like a 2 to 5 year play out. How soon the market realizes and appreciates it, I don't know. But it's going to happen, I think. And as long as Lemonade isn't going to be, run out of cash and the shorts, suppress their price so far where it makes it really hard to raise capital. I see high likelihood of Lemonade becoming a much bigger company. One thing I wanted to point out about Lemonade that I really like, that aligns with us really well, is they're giving back. I think they give back like 10% of their revenues after costs or something like that to charity based on what their customers choose for charities. So we really like that giving back angle. That's why in our business model for our hedge fund, we have built into the offered memorandum that half of the fees, half of the 2 and 20 management and performance fees we collect, after fees, those go to charity as well. So that's sort of how we think about evolving capitalism for the future, and that's what keeps us going, not just to make money. And we love the investing world and trying to pick stocks and make money. But more importantly, what drives us is trying to evolve capitalism to be more of a giving back vehicle than just a way to, accumulate more wealth for yourself.